We used our whole life insurance policy to secure this condo with our family in the Dominican Republic. Now, why in the world is this important for us to share today is because we want to teach you how you can use life insurance to grow and secure your wealth. So let's get into it. Oh, and by the way, you don't have to die in order to do so.
Right, and thank you for addressing the elephant in the room, because most people think that you have to pass away in order to leverage life insurance, but we are alive and well, and we were able to use the living benefits of our life insurance policy to purchase this place. Now, here, the biggest reason why we did that is because we frequent Dominican Republic often. Carmen's Dominican and she has family here, so we come here and we spent a lot of money in Airbnbs and hotels. So a better use of our money would be to buy a place that we can come to and rent it out during the peak seasons. That way we can get our money back and we have a place that we don't have to pay for when we come and visit.
Amen about that, right? So the idea behind all of this is, let's first and foremost lay down the ground rules in which we decide to have life insurance in the first place, okay? Because I know that this topic cannot be super sexy as opposed to like what we're talking about with your investing portfolio, but the point is, let's figure out how we can secure our income. And for Darius and I, that's the number one reason. So point number one, income security. That's exactly why we have life insurance in the first place, is because we know our value. We know what we're worth. So with us working every single day, we know what our return is. And so with that, life insurance is the only asset where you can literally purchase your net worth. So we do that with life insurance policies.
And it doesn't cost our net worth to do it.
That, right? And so that's the reason why we have the maximum amount of life insurance that we can have on us, which means we have multiple policies in order to do so. And it's been several years that we've accumulated several policies, over 9 years that we've been policy holders. So that's the main thing that I would say is we have children, we have family members, and we have a legacy that we want to protect for the ones who come after us.
Right, and the responsible thing for us to do was not to give our 5-year-old daughter all this responsibility of maintaining our assets with her income, which she doesn't have any. So we bought life insurance so that it could maintain the assets so they can continue cash flowing in our absence.
Well,
we don't plan on going anywhere.
No. Yeah, disclaimer, we ain't going nowhere long time, sure. So the point is, number one, like we said, income security. That's the biggest thing for us. What we hear in the marketplace is that many people say, oh, well, my assets will protect our income. But the question we tend to ask when someone tells us that is, how are the assets being paid for? How will the assets be maintained if you're no longer here? Because we know as property owners, we have property taxes, we have maintenance fees and all
HOA.
of that. HOA, does that investment, does that property, for example, cash flow enough to cover all of those expenses? Or is there some sort of income that's needed to pay for these expenses? So we want to make sure that we don't put the cart before the horse, because generally speaking, it always takes income or some sort of monetary donation, right, to feed and fuel your assets. So that's why for us, we want to make sure the foundation is laid and the income will always be secured.
Right, and then another thing that we did is we took a playbook right out of the bank's playbook. They are the best examples of what we should be doing with our money. They say to deposit all your money into the bank and they give you a 0.01% interest on your money being earned in your savings account, but then they take that same money and they leverage it to get a higher interest loan and they give you debt. So basically what we wanted to do is we wanted to create something very similar. The banks are the largest purchasers of whole life insurance. There's a reason why. So we decided to leverage our life insurance policy to get a loan from the insurance company so that we can get a low interest loan from them instead of using the banks here in Dominican Republic. Because hey, the banks here in Dominican Republic on real estate, it's a double-digit interest rate.
Yeah, we're talking like north of 15%.
Right, and we don't have to worry about that with our life insurance policy because we get a single-digit simple interest loan. Exactly. Now, that money, again, is being paid back from the Airbnbs and rentals, and we can do that in 2 months for the whole year, and we can come and be good the rest of the year.
We can do one of these. Sit up and lay back. And the point, like Darius was just...
And that's what you want to do with your assets.
Yeah. Yeah, you want it to cash flow. That's the whole point, right? We want our assets to cash flow, because if they're not cash flowing, maybe it's not the right asset for you. So the second point that Darius was alluding to is, because we own life insurance policies, we have some perks that come along with that called living benefits, and we'll put that on the screen, living benefits. So the first living benefit that Darius literally just alluded to, there's a cash component that grows inside of your whole life insurance policy called cash value. Now the cash value actually grows every single time you pay your premium or when a dividend is applied to your policy. And the cash component grows guaranteed compound interest. So for us, it was important to recognize that we have this opportunity to leverage our life insurance policy to do financing. And like we said, we've had our policies for many, many years, almost a decade to this point. And when we first got started, we didn't have as much cash to utilize in our policies, but we used it to the best of our benefit. We got out of debt. We used it for business financing. We used it for other financing opportunities that helped us build along the way, right? This isn't just about overnight success. This is about what we've been doing for almost a decade with our policies. And it starts with day one. So with our very first policy, it helped us get out of debt. And
which we were paying about 25% interest on credit card debt.
Yeah, so we swapped interest rates. We knew that we were paying simple interest with the life insurance companies. So we said, let's swap it over here, as opposed to the compounding double digit that we were paying with our credit cards. Now, that's one living benefit, the cash component, being able to leverage that so that you can create some sort of financing opportunities in your lives. And the point is, we got to pay the loan back, right? We got to pay the loan back because it's going to compound. The interest is going to compound if we don't pay it back.
Right.
All right. Now, quickly, we can go over a few other opportunities to leverage your life insurance policies while you're living. And another opportunity is called a terminal illness rider or a chronic illness rider. These are some of the more popular ones that we tend to see in the industry. And that's just if you ever become diagnosed with a terminal illness or chronic illness, you're able to liquidate a portion of your death benefit to help you pay for your living expenses. How about that?
Now, there's a laundry list of riders that you can get with your life insurance policy. The terminal illness and chronic illness, depending on the company, isn't something that you'll be charged for, but the other riders are something that you do have to take in consideration the cost for, in addition to paying your policy premium. Now, one thing I want you to recognize is the fact that we didn't mention the insurance policy itself was the investment.
Yeah.
Because it wasn't.
Yeah.
The opportunity was what we use the loan for. We used a loan for to borrow from our life insurance policy and buy an asset that's producing more interest than what it cost us to borrow from the insurance policy.
Ding, ding, ding. Yeah, because far too often we find that people buy life insurance policies and they think that all of a sudden they're competing with the S&P 500, and that's just not the case.
Right.
You buy a life insurance policy to protect your income, and maybe with a whole life insurance policy, there's a cash component that can grow inside of it that can allow you to then use it to invest.
Yeah, I would say that's a common mistake that people make is they will overextend themselves to buy a dividend paying whole life insurance policy and sit on it, when you need to buy the policy that
you can afford,
that fits your income and that you can afford, so that you can then over time, a long-term play, use that cash value to do something with that earns you more money than what it costs you.
Mm-hmm.
That's the key.
Now, one question I can hear way in the back from the people who are watching is, Darius and Carmen, how in the world do I get a loan from the life insurance company for my policy? So it's actually as simple as making a phone call or submitting a one-page PDF that says, I'm requesting X amount of dollars from my life insurance policy. Now, the thing to note is there's no questions, right? Or there's no applying
or credit checks
that we're used to as far as like a formal bank loan, because what you're literally doing is putting your policy up for collateral, and that's all the life insurance company needs to lend you their money, because you're putting your policy up for collateral.
Right. Now, let's talk a little bit more about the generational wealth, because what we're doing is we're creating a system for not just us to follow, but also our daughter to follow, and hopefully our grandchildren to follow. She's 5, so we're not talking about grandchildren as husbands and all that stuff.
Just yet.
What we're doing is we're creating a system because we're already a part of a system. The way we understand and manage our finances was based on how our parents and our grandparents managed their funds. It wasn't until we were able to put ourselves in had the opportunity to put ourselves in a different environment where we were able to learn how people that have significantly more net worth are able to manage their funds. So we're creating a very similar system of the bank, and we want to teach that same system to our daughter.
And we've talked about 2 points only, people. We talked about the death benefit and we talked about the living benefits. Those are the key mechanisms that allow us to literally leverage whole life insurance to have a double whammy. We have the death benefit, it's guaranteed, and guess what? We also have cash value that's guaranteed that is allowing us to buy assets while we're living. So
third point, generational wealth.
Generational wealth. So not only, as we're concluding, will our daughter now have this condo and our family will have this condo if we're no longer here, they'll also have the death benefit proceeds if we're not here. In addition to all the other assets that we purchase with our whole life insurance policies when we're no longer here.
Right. And the purchase of those assets is what increases our net worth so that we can buy more life insurance in the first place.
Ding, 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 ding.
So just think of the system this way. We, over the past 10 years, accumulated cash value in our policy. Initially, what we did is we used it to pay off high interest debt, which was about 20, 25%, 30% in some cases. We started making those minimum payments to pay that debt off. Now, 10 years later, we leveraged that large pool of funds to purchase an investment property here in the Dominican Republic. Now, the payments are going to get made back to the system by the people that's going to come and rent a place via Airbnb in the peak season of the fourth quarter. Now, that system itself is going to be repeated over and over again, increasing our net worth so that we have a larger pool of funds to buy more life insurance and also to buy more assets. So here's the hack. You want to leverage your life insurance policy to borrow from the insurance company at a low interest and invest it at a higher interest rate. You use the asset that you invested in to pay the insurance policies back. Now, where do you sit in this equation? The only thing you did is you provided a death benefit, or you provided a body so that you can get a life insurance policy on so that you can start this system. You teach this system to the next generation so there's a larger and larger pool of funds to make bigger and bigger investments.
And here's a layman's term breakdown, just in case you didn't follow the engineering mind. The idea was we have life insurance policies. We have life insurance policies, and the point of a life insurance policy is the death benefit and some living benefits. We leverage the living benefits, aka cash value in this example, to purchase a property. When we have that property, what we're going to do is we're going to rent the property, and the rent, or the money that we get from Airbnb, is going to go pay down the loan that we have, right? And as we pay down the loan, that's going to continue to allow us to have more cash available to borrow or leverage again so that we can purchase more assets, and we keep doing the same thing over and over again.
Right, and as you were saying that, what I was thinking about is the bank. The bank needs warm bodies in order to make the deposits in the bank. It doesn't work without people. The same way with life insurance. It doesn't work without people.
Yes. The
only thing you're doing is you're segmenting your family as those depositors into your system.
Yeah, so good. And one thing our mentor always told us is that there's no difference between the life insurance companies and the banks, right? The only difference is the sign outside the door, he would always say. And the thing that I really want to bring to the forefront is we are owners in a mutual life insurance company. So that means we have more control over this product that we own, which allows us to have more leverage. So we're a little bit higher up on the totem pole as it pertains to the relationship that we have with the bank. So because we have ownership with this life insurance company, because we own this policy, we can leverage it for collateral to create our own source of financing as opposed to applying and begging for it at the bank. Now, it all, again, just depends on where you get started, because so many people watch our videos and hear that you can use the cash value of life insurance policies, and they all automatically think that they're going to be guaranteed hundreds of thousands of dollars to begin with. And I want to make sure that you all hear us. You got to get started with what you can afford today. And I guarantee you, family, that it's going to grow into something significant as long as you stay the course. Like I said, our very first loan from our policy was only $5,000, but that allowed us to get out of $120,000 of debt because we did the whole snowball system with just seed money of $5,000. So you got to start with what you got.
Right, and that's an interesting point, is the fact that not everybody should use this strategy, because not everybody can be responsible with having this much control. Maybe you should just be depositing money into the bank and then getting that high percent interest rate. And the reason why you get high interest rate in the first place is because you're not responsible enough to manage the money on your own.
Yeah, no judgments. That's just the system.
Right, because here's the thing. You can get a life insurance policy on yourself because you're healthy and you're a warm body. Yes, but maintaining the system also, it comes with a level of control that you need to have responsibility for, like paying the loan back, having a reason why you're getting a loan in the first place, and the asset that you're going to be using in order to get those payments back so that you don't have to. There comes a level of responsibility that you have to take on. And if you don't have that now, you're not going to get it by getting into creating a system like this.
I'm so glad that Darius brought this in, because exactly what we're saying is we're leveraging our life insurance policies to create assets, assets that are going to create more money for us, not put us further down into the hole. So that's how this whole system works. It's 3 steps. The life insurance guarantee, death benefit. Get life insurance because it's going to protect your net worth. The second part of it is use it for the living benefits. What can you leverage today while you're living as a part of being a policy holder? And then step number 3 is literally just leverage those living benefits to create generational wealth by buying more assets and doing it again and again and again.
Right, and one thing that comes to mind is the Elon Musk. I know I mentioned this in several videos before, but it is really important to understand like what he did in order to buy Twitter.
Yeah.
He leveraged his stocks that he has in his own company to get a loan and make the purchase. We're doing something very similar, just on our own scale. Now, he was able to increase his net worth based on his ability to borrow money. He didn't use cash. He has to pay a small interest rate on it, but the asset itself is producing more than what it cost him. We're doing the exact same thing. We're not talking about anything that isn't being done right in front of your face right now. We're just saying to look around in your own situation, your own circumstance, your own experience, and see what you can do to create income for yourself. We chose Dominican Republic because we come to Dominican Republic often. What will you choose? What are you using or doing that you can create an asset out of so that you can start generating income? Your money can start generating income instead of your physical body.
And what Darius means by the physical body
is active income.
Trading your time for money.
Yes.
Exactly.
I should have said that.
You said body, and I was like, I don't know how people will receive that.
But it's the truth.
It's the truth.
The bank just needs a warm body to deposit money into it, and the insurance company just needs a healthy soul in order to get a loan for it. And then they're making the money because you're paying the premiums. You just have to step into the roles that you're presented with and use it to the best of your ability. The reason why the United States has as much money as they have, and the only way to create money is through debt, right? So why not do stuff on our own scale inside of our own families? Yeah, your mom, dad, or brother or sister may not be responsible for you to do within them, but we're doing it within just Carmen, myself, and our daughter. We teach our family about it, but we let them do their own part. And when the money, when it makes sense, we may do something together, but what they're doing doesn't dictate what we do on our end.
Yeah, because the point is having a plan, having an active plan, being conscious about the legacy, being conscious about the wealth building that you want to create. And for us, this is what we choose to do. So hopefully that this information was helpful in getting you to understand the benefits of whole life insurance. We're talking whole life. We're not talking about anything else but whole life in this video. And so that you understand how you can use the death benefit mechanisms and the living benefit mechanisms to finance your lifestyle and to own your own lifestyle. Now, we do have to put a disclaimer out there that all of this information is just on our specific personal journey, right? This is no financial advice. We're just sharing with you the things that we've done with our life insurance policies. So if you are curious about how to start your next life insurance policy, then click on the link below. We would love to serve you at the Wealth Nation so that we can explore your options on what your next policy might look like.
Remember to own your own lifestyle.
Or someone else will.